things are exploding. I think there's significant imbalances in the supply demand for all battery metals, but particularly graphite. And I think similar to what you've seen in the lithium space, where pricing has gone through some significant pressures and obviously increased tenfold, 20-fold. I think we'll see similar to that in the graphite space, and just a fantastic time to be involved in it.
My next guest is Richard Pearce. He's the CEO of South Star Battery Metals Corp. Trades on the TSX venture under the symbol STS, and in the United States under the symbol STSBF. Richard, welcome.
Thanks for having me, James. Pleasure to be here.
It's great to have you. Richard, you're nearing production on your battery projects. Why don't you give us an update on what's new with the company?
Yeah, it's really exciting times for us. So we're fully licensed, fully permitted, finalizing our financing. We should be sticking shovels in the ground in the next 45 days or so. 12-month construction commissioning schedule, so we'll be in commercial production basically May kind of 2023, and we plan on scaling up from there. So we have 3 phases, 5,000 tons, 25,000 tons, and then 50,000 tons. We're fully licensed and permitted for our phase 1 operations. About the time we're commissioning, we'll be licensed for phase 2 and phase 3. So exciting times there. We also have a project in Alabama. It's basically 2.5 years kind of behind where we are in Brazil. And I can't think of a better time in the previous decade of having projects that are queued up and ready to go for battery metal space. Just, really things are exploding. I think there's significant imbalances in the supply demand for all battery metals, but particularly graphite. And I think similar to what you've seen in the lithium space, where pricing has gone through some significant pressures and obviously increased tenfold, 20-fold. I think we'll see similar to that in the graphite space, and just a fantastic time to be involved in it.
You bet. So you must have a pretty clear view of the economics of your graphite plant in your production scenario in Brazil. What are your total costs in terms of all-in costs of production?
Yeah. So in general, we did our PFS in 2020, and kind of the important things were, $80 million in PV5. We were using a life of mine cost of $400 and average basket price of $12.75, more or less. We've updated all of our costing as well as pricing. FX has gone from the 395 at that point to somewhere between 5 and 510. All of our cost is going to be in the Brazilian reais. All of our production will be in Brazilian reais, so it's good from that standpoint. In terms of pricing, it's gone from 1275. We're currently pricing between 1,600, 1,700 a ton on average, and our cost has gone from about 400 life of mine to about 475, somewhere in that range. So obviously inflation across the board. Most of it has to do with diesel, energy consumption, those types of things that have obviously reflected in the petroleum price and whatnot. But for the most part, our pricing went up more than our cost did due to inflation, and I think that trend is going to continue just because there's so much demand sitting out there compared to what's coming online. And again, we'll be the first new production in the Americas in over a decade. Mm-hmm.
Wow. Then how does that sort of cost profile compare to other graphite producers around the world?
Yeah, it's really something that we focus on in terms of risk assessment. Whenever we looked at projects, and again, I've been in Brazil full time since 2008, one of the core criteria for our investment was really looking at being in the first quartile of cost. So when you look out across the various producers as well as projects, in our presentation that's on our website, there's a great slide there that shows the 3 most profitable mines in production today are all in Brazil. So when you look out across every jurisdiction that's producing, Brazil is one of the most profitable jurisdictions out there. I think it's something that will be cost competitive with the Asian production so that we can be profitable throughout the inevitable ups and downs of the commodity cycles and things like that. But I really think that because of what's coming online in terms of, gigafactories, expandable graphites, all the different uses for graphite that we see coming up. I just think the pricing pressure is going to be going through the roof because there's just not enough production coming online. So I think in general, we will be one of the most competitive cost producers out there, which will allow us to be one of the most profitable for investors. And the ore deposit itself is extremely high quality, so we'll be able to deliver good quality spec material to our clients. So we're just excited about kind of what we have coming up.
Yeah, you bet. I'm curious as to, and I say this coming from the perspective of, I'm actually involved with a consortium of business people in Canada here who are partnered with a Canadian, or rather a Chinese manufacturer of EV battery plants. So we are in discussion with financial interests and manufacturing groups to establish potentially 2 plants in Canada. And I'm curious as to, the price of lithium, the price of graphite, the price of cobalt, it's all going through the roof now because of the supply side cannot keep up with the demand side. But there's a lot of lithium in the Earth's crust. There's a lot of graphite in the Earth's crust. So I'm wondering, how long is this price discrepancy going to continue? How long will prices remain in contango to such a scale where you just, the futures price, you can't even lock in supply at $70,000 a ton right now for lithium if you tried, because everybody's holding out for the higher prices as long as that curve keeps going over the time frame. So how long do you see that imbalance continuing before the supply side can catch up from mining?
Yes, sir. I think that's really kind of one of the key questions that we spent a lot of time looking at. Obviously, there's lots of projections out there. And my crystal ball is probably as good as the next person's. But having thought about it a lot and having looked at our own experience, I started working on this project in basically the end of 2010. We got our final permit in place on December 31st of 2020. So when you think about the 10 years it takes to kind of move through licensing, permitting, development, all the different phases as you get from a geologic potential all the way through to having a 43-101 with resource reserves, et cetera, and the regulatory environment that we're in. Currently, I think 2022, there is no real slack left in the graphite system itself. So there's no excess capacity that's really sitting out there that can continue to feed additional product into the supply and demand dynamics as it sits right now. So I think we'll see pricing pressure, significant pricing pressure this year. And when you think about a lot of these other projects, we keep about 35, 40 different companies in our actual database and track them fairly closely in terms of where they are in terms of development versus production, et cetera. And I think what you see a lot of companies doing is kind of moving to the value add component and kind of leaving the mining component behind, because they see that the margins associated with the value add is really high. Again, my personal perspective is, if you want to be successful in this, you have to be able to sell into the lithium ion EV space. You have to be able to sell into the alkaline battery space. You have to be able to sell into the fire retardants, expandable graphite, communications, et cetera. The companies that are really making a lot of money today have a very diversified portfolio and a very long list of clients that are lined up to secure production. And so we're very focused on basically having a very broad list of products that can be sold into a variety of sectors and markets. And we're just focused on margin. I keep really kind of driving this home that I do not want to be a Walmart. There's lots of profit out there. 30, 35% EBITDA margins is what we're shooting for. And I think that's very attainable. And we want to have folks lining up to get to our production because it is such high quality. So when you look out across the different spectrums, Brazil is very blessed in the sense that it's mostly a large flake environment, meaning that the particle size is larger. certain jurisdictions have finer material, and there's different demands from different sectors that are looking for it. Lots of production from around the world, I think, could come online. There's about 1.1, 1.2 million tons of demand out there for concentrate currently. That's supposed to double basically by 2025, which means 10 to 15 new mines, average size mines, have to come online between now and then. And that has to double again by 2030 for us to have a shot at meeting the projected demand out there. So lots of demand and not very clear understanding of how the supply is going to come online to actually deal with that. So I think we've got a 5 to 10 year window of price imbalance. And being one of the first projects that's fully licensed and coming online, I think we've got a great runway to kind of position ourselves to be $1 billion company in 5 to 7 years, no problem.
Sure. And at this point, do you have relationships with offtake customers who have specified certain lithium or certain graphite products that they'd be interested in?
Absolutely. We just recently put out our product information bulletins for our con. We are producing different variety of purified graphite samples, 100-gram samples that we're sending out to a variety of clients, including EV space, looking for spheronized purified graphite and other things. So we're in conversations with about a half dozen different groups currently for take-or-pay offtake agreements. We've got 2 or 3 MOUs already signed, which have been previously announced by the company. So I think within 3 months of us basically announcing our financing, we will be sold out for the near future.
Wow. Okay. Well, that's super intriguing. So you're not sold out yet?
We're not sold out currently, but like I said, we have 6 or 7 ongoing conversations right now for our production. And ideally, what we do, James, is kind of take or pay 65% of our production and leave about 35%. That de-risks the project, and then we've got our lights, our salaries, all the meat and potatoes that we need to meet in terms of cash flow covered. It's just a step towards de-risking the project. And then we leave about 30-35% floating to spot because, again, I'm betting that we're going to be under significant pricing increases. And if we leave 30-35% of our production open to spot, that just allows us to kind of take advantage of the moment. So that's kind of what we're negotiating and moving forward with.
That's interesting. I had a conversation with my partners this morning so they look to me for advice on the mining side. And I said, well, yes, you can. They want to do some forward offtake agreements from companies that are not quite as far along as you because they envision being able to capture a discounted price going out into the future by advancing exploration development capital now. And I said, yes, that's true, but you've got to keep in mind that no company is going to open the door to 100% offtake at a discounted rate and have no exposure to the blue sky price potential. And so they asked me what was the maximum. I said, well, I don't think you'd be able to look to any company to negotiate in good faith above 30% of their offtake into the future at a fixed price now. And that's so does that sound like about right to you?
I think every case is every case. I guess it really depends on how hard it is to get these projects financed. Again, in our presentation that's available on our website, there's a bunch of different projects in there at the different phases. And what you see are a bunch of projects that are kind of stacked up around 20% IRR, but it's $150, $250, $350 million CapEx. I think a lot of those projects are just, quite frankly, it's unfinanceable currently because it is such a large capital requirement. And there really is no debt financing sitting out there for most of these projects because the banks haven't quite figured out how to judge graphite and pricing, the commercial conditions, et cetera. So when you look out kind of at offtake, I think there are lots of people talking about offtakes and very few people delivering hard take or pay contracts. Maybe eventually you see, Ford, GM, and others stepping up to the plate to actually secure some of this supply as it's sitting out there. But I think what you'll see is that most of our conversations have been, there's no discount. It is going to be market price. We'll establish the pricing based on certain metrics, and there will be, monthly, quarterly adjustments to that based on certain benchmark sorts of pricing mechanisms in there. And certain conversations that we've had, there's folks that are willing to upfront pay, up to a year's worth of production just to guarantee supply. Again, when you're looking at a $250 million capex, it's that what somebody may be willing to pay you in an upfront prepayment on an offtake is inconsequential to $250 million that you're trying to finance. So again, I think that's another huge advantage where we are, is because our capital intensity is $35 million for phase one, phase two, compared to a lot of these companies that are having to invest 30, 40. They're having to invest that in infrastructure, and we're just not. So I think when you look out across the potential offtake agreements and what's out there, I personally don't know of anybody who's looking to discount pricing mechanism, just because I think everybody sees the writing on the wall. But again, I think every case needs to be evaluated and kind of looked at. So I think it's something that may be possible, but in the conversations that I've had with different CEOs and different companies and different opportunities out there, most people are looking at trying to price at market, and other companies are looking to secure supply.
You bet. Richard, we're going to have to leave it there for now, but that is a fascinating story, and I'm very excited for you. That's so great to hear of companies going into production. I'm so used to hearing companies that are, getting ready to drill, and it's like, well, years from now. So we'll leave it there for now. Richard, I'm going to come back to you in due course, and we'll get an update on the situation, but thanks for your time today.
Thank you, James. Pleasure.